It certainly is looking ugly down here, down 634 points, as you said, on the Dow. Matt Chetlock has just stepped away from his computer to join us into the close. Matt, talk us through what the sentiment is down here. Clearly, it's not as high a volume day as it could be with bond markets closed, but pretty ugly nonetheless.
Yeah, we wish we were closed today, too. It looks like it. But I think the sentiment is the more concerned about tomorrow morning on the opening. Does this accelerate when everyone's really involved and the bond market gets involved? These losses really extend. So, it really turned hard this afternoon when oil turned. And that's the impetus for the sell-off right now. And you expect the volatility in the last half hour, and we're certainly getting it.
So oil is one of the factors. What about the other ones out there? Clearly, tech is selling off a lot. Why is oil affecting that?
Well, oil was the second half of the sell-off. This morning, it was definitely Apple and GE. They were the major features. Goldman Sachs is another one. So they were the focus, but the market was only down about 300. The market really turned this afternoon after some comments about production in OPEC, and that reversed oil. And that's what the slide was we saw at the end of last week. Oil having 10 straight down days, make it 11 today.
What about the dollar? People concerned about that? Because on one level, you could say it shows that the U.S. growth outlook is better than the rest of the world.
Yeah, there were concerns on a lot of the earnings calls about the dollar strength. So I think that's extending it. But as you mentioned, the dollar strength shows this is where they're going to put your money. And this is shows signs that our economy is okay. So it is a little bit conflicting.
If you had to guess now, clearly we're going to close down today. Are we going to open down again tomorrow?
Well, as a trader, I think you want the momentum, flush the opening, and maybe we can get some balance out or bounce after that.
Okay, Matt Chetlock, thanks very much for joining us. As always, we have just over 2 minutes left of trade. Let's have a look at the S&P 500 intraday chart. It is ugly. We've used that word a lot. It is fitting, though. We opened down. We continued down throughout the morning and really have picked up the selling right as we approach the close. You can see that leg down to the far right-hand side corner of the chart. What does this mean for all of the indices? Well, the S&P is actually the outperformer of the big indices. It is down just over 2%. You've got the Nasdaq down about 3%, the Dow somewhere in between down about 2.5%. Sector performance for you today, there's not much to point to in terms of attractive spots. Clearly, tech is in the eye of the storm, down significantly. Consumer discretionary down, industrials down, financials down as well. We've got one positive sector there at the top. It is, I think, utilities. I can't see from here. I'm too far away from the screen. Consumer discretionary and utilities towards the top of the pile, but certainly it's real estate at the top there. Real estate, utilities, consumer discretionary outperforming in a relative sense. Just one that is positive. Half screen for you as I bring in Bob Pisani, showing how the euro and the pound have slipped significantly. The dollar is up. Goldman Sachs, Apple, two of the stocks we've been talking about most of all, weighing on the Dow today.
And if you stick with the two basic conundrums, growth and the Fed. What is global growth going to look like in 2019? We don't know. That's part of the oil problem. But oil's not the only thing. I know you were talking about it. Commodities have been terrible. There's been double-digit declines in zinc and aluminum and copper the whole year. So this is a global growth slowdown question. The dollar strength plays into that as well. On top of that, we've seen tech today, and you can't blame it all on Apple. That's a valuation takedown that we're seeing in the big high beta tech stocks. That's a sign that they don't particularly believe the 2019 growth numbers are going to be there. The Fed's another problem. They're really boxed in. The economy numbers are good, but the market wants the Fed to start slowing down. They can't slow down. They can't do anything until December. The economy is still generally strong. This is this box that they're in right now, and it's a tough dilemma for the markets to deal with.
Bob, thanks very much for that. The bell started ringing 10 seconds late today, but it is ringing. The NYSE ringing it here is Let's Win Pancreatic Cancer. That was at the Nasdaq. Here at the big board is Avalon Bay. That does it for the first hour. The closing bell. Ugly session. The Dow closing down 2.3%, just shy of 600 points.